What's up, guys? Welcome to the Crypto Savvy channel. I am Craig, and we're going to be going over the charts. I made a video earlier with no volume. There is nothing more irritating than that, but we're going to go into it. I'm going to talk a little bit about how bubbles pop. We're going to take a look at a few bubbles, and we've talked about it before, but I'm going to go in a little more detail. This is going to be a longer video. We're also going to go all the way down into the smaller time frame, into the 4 hours for Bitcoin, so make sure you stick around for that. We'll also take a look at my old charts, Ethereum, Litecoin, XRP, gold, and silver at the end. Remember, guys, all the markets intertwine and they go together to tell a story. Now, just watching one isn't going to make any sense. So a lot of the people that just chart Bitcoin really aren't getting the whole story. We're going to take a look at the whole story here. This is going to be a little bit longer than normal, but there's going to be a lot of information packed in this video. For those of you that ask, for me to make training videos, if you watch all my videos, I don't erase any of them. There's many lessons in all of them. I use Elliott Wave, Wyckoff, market structure, all kinds of different things. Just check out the videos. It'll help you to understand markets. Anyways, before we begin, make sure you scroll down, smash those thumbs up, leave your comments down below. Let me know what you think of the video and what you would like to see in the videos, and subscribe to the channel if you haven't already. I do daily updates Monday through Friday, and I am starting to do my members live videos on Wednesday. I haven't made an exact time yet, but there will be members live videos. You can join by hitting the join button underneath the video. And we're going to be going over on Wednesdays, we're going to be going over whatever charts people that join the lives want to look at into detail. So definitely, if you're interested, make sure you join the membership. So anyways, let's get into it. So this is the Amazon chart in the .com bubble. We've talked about this many a times. There's some other bubbles we're going to go over also, but they basically all make the same structure, and nobody thinks they're going to go down as far as they do, just like everybody thinks, Bitcoin has bottomed. I don't believe that. As you guys know, I think Bitcoin is going to bottom sometime in 2023. And my target is between 3,000 and 7,000. I have longer targets, and we're going to take a look at those. We're going to take a look at a lot of stuff, guys. So like I said, make sure, sit down, relax. This is going to be a longer video, but it's going to be packed with a lot of info. Now, what happens in a bubble pop? You can see, there's rallies. They get everybody bullish again just to make a new lower low. And then they, get another bounce, and then everyone gets bullish again, and it just keeps making lower lows. Now, everybody says dollar cost average in a bear market. Well, we're going to talk about that because in a bubble pop, it can be a lot longer for a recovery. So once something drops this far, there's a lot of confidence lost in the market, and it takes a long time to build confidence to get the price back up. Again, we're going to talk about all this. So like I said, you get rallies within it the whole time. If you're trading, great way to make money. If you are interested in trading, there's a link down below in the description. Prime XBT, my favorite exchange. You can trade Dow Jones, NASDAQ, gold, silver, oil, S&P, Forex, everything, all from one exchange. Definitely check them out. And you can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off of all your trading fees. So definitely check them out. And guys, if you're new to trading, there's a contest section in there. You can trade for free. If you can't build a fake account, then you can't build a real account. So if you start out with $5 or $10 and you can't grow that, save yourself some money, because if you can't grow $5 or $10, you can't grow 10,000. So start out small, get a strategy that works, and then add to it. So anyways, going back to this, as you can see, this is almost identical. And if you look at how long it took to recover for the .com bubble, let's take a look at that. So Amazon topped out here in 2000, right in December of 99. If we take a look at the chart, here's that whole bubble pop right here, the first bubble pop. So if Bitcoin is going to succeed, it could take, I'm not saying it has to, but it could take, this was 99, or actually January of 2000, all the way till 2009. So it took almost 10 years to recover after this. You had big rallies, another dump. I know a lot of people talk about the 4-year cycle in Bitcoin. The fact is, all markets, if you look at them, have a 4-year cycle. to some extent because there's a 4-year election cycle. The halving, I don't think has anything to do with it. They make it sound like there's less Bitcoin. They're harder to get after a halving. No, there's still more Bitcoin every day after the halving. There's just less every day, half of what before the halving was made. So I'm just going to use random numbers. If there was 1,000 a day Bitcoin getting mined, then there's only 500, but there's still more. So it's not like there's less out there. There's still more out there daily. So just something to think about. I do believe Bitcoin has just been in one massive bull run. I don't think there was a bunch of bear markets every 4 years. I think it was just one big market with some corrections. And now we are in our first true bear cycle like this was here, right? But as you can see, if it plays out like Amazon, you can see what happened after that. But again, it took 10 years to reach that all-time high again. So keep that in mind. We're going to take a look at some other bubbles. So this is the Dow Jones. This was the 1929 Great Depression. Could that be what we're looking at now? Definitely a possibility. I know everybody's saying it's impossible. It'll never happen. But you can see the market structure. I'm all about market structure. And we definitely could see something like this. Does it have to be this big? No. But could it be? Yes. As you can see here, where it had this big, huge drop, and then it bounced up. Everybody got happy again. I'm sure I wasn't around, obviously, but I'm sure everyone got happy and thought the bull market was back in. And then it just to continue down and have little fake rallies all the way down. This took from 1929 to 1932. So about 2 or 3 years for this whole drop, right? So if we were to have the same thing, this one started in 21. The end of last year. So if that was the case, maybe 2023, 2024, if it plays out like this, it bottoms. Now, this is what I was talking about dollar cost average. Please pay attention. So for the people up here, if they dollar cost average this whole time and kept buying up here all the way down, it took a long time to recover from their money. So if you can see here, it took, I think it was 1929 to 1954. So about 20 some years before it reached the all-time high again. So if you were dollar cost averaging this whole time, let's say you were right here at 234, right? You dollar cost averaged all the way down. So say you were at, say 220, right? How long did that take? That took about 20 years before it reached that point again. So during this whole time in here, they were at a loss. Once it broke here, the people that win were buying down in here. And they just, their money just grew this whole time while others waited just to get back to where they were. So that's something to be aware of in the dollar cost average strategy of Bitcoin, because there's no guarantees that it's going to continue up. You guys, I'm sure most of you were around. Everyone was calling 100K at both tops, and we never got anywhere near it. We got 69K. So just be careful with that dollar cost average strategy and all the myths and everything else. A lot of the hype people go around, right? So this is right now the Dow Jones. As you guys know, I think we're going to be headed towards the 2588 for our next major support area. As long as we don't break these highs here. If we break back up above this, then boom, the bull market's on for all markets and everything is going to go to the moon, right? I don't see that happening, but it's possible, I guess. But right now I'm looking for next time we drop below this 30,007 point range, then we're probably going to come down and break here and head down towards that $26,000 to $25,000 range. Let's take a look at Sony. So Sony, big company, big corporation, right? Never going to fail because they're, great. Well, you can see what happened in their bubble pop, right? They went all the way from, this was a 90.27, almost 91% correction. And that was from 157 all the way down to 23 right here. But if you look, it actually went lower. It took a longer time to bottom. That, like I said, was around 91%. But as you can see, that's how bubbles pop. They just get rallies all the way through to keep people in and get more people to buy so they can dump on them. That's, again, how bubbles work. And I do believe we are in a huge Bitcoin bubble right here. Now, if it was to happen like this, then it could be a longer bear market. You know, we might get another rally all the way up to the $30,000 range sometime next year or so before continuing down. But I believe it's more the Amazon structure right here, because this thing is just playing out beautifully. So I believe it's going to be more like this bubble. These are both weekly charts. Both tops are about the exact same. Bottoms, everything lines up perfectly. So go back over to here. You can see what happened in Sony. And I'm sure everyone thought, no way it could fail. It was, you know, back to the bull market here, back to the bull market here. Same thing. This is Nintendo. Same thing, guys. Bubble pop. We had the big rally up, and then, you know, just total destruction all the way down. How long did it take Sony to recover? Well, this top was year 2000. Still hasn't made it, and it's 22 years later, right? Still have not broke the all-time high. Kind of scary. So there again, there's no guarantee that Bitcoin will break its all-time high. I'm not saying it won't or it can't. Just saying there's no guarantees, right? In any market. And here is Nintendo. Same thing, guys. Let's see how long it took. This top was in 07 and still never broke the all-time high. So something to be careful about. If this does break the all-time high, this thing may go to the moon. So keep an eye on that. But anyways, just showing you guys how bubbles work. Now let's get into some more stuff here. So as you guys know, 24.5 is a major area I've been talking about forever. That was one of our first targets. Once it broke, I said that'll be huge resistance. Right now, that's the 55 EMA. Now, if this is the monthly chart, so if the monthly, you know, I'd have to see a monthly open and close above that 24.5 before I would consider getting bullish. And then we still have these EMAs up here that we would have to cross, right? But if you look here, I have drawn in this trend line on the monthly RSI. Now, I know everybody's looking at the weekly RSI, you know, at bottom. Well, like I said, I think that the market is a lot more mature now. You can start looking at the monthly. And we came down here, closed below that trend line. We're up above it right now. But if we close below this, guys, this monthly, and what is today, the 18th, so we're halfway through the month. If we close below this, Bitcoin has a long way to go down on the RSI. So be careful of that. And like I said, watch this 55 EMA. That's around 24.5. And I'll show you in the smaller time frame charts how that makes sense also. Let's go over to... So this is my long term. So this, I have 5 waves counted in here. And as you can see, these blue right here, this is the RSI supply and demand indicator. As you can see, the top of wave 1, we had our supply and demand. Top of wave 3 had our supply and demand. Top of wave 5, supply and demand. And you can see it's getting smaller and tighter on each one, right? Each move. This could be our first real bear market. Again, I could be dead wrong, but it's definitely a possibility this could be our first bear market. This could have been wave 1, this wave 2, wave 3, wave 4, wave 5. What happens after 5 waves? As you can see, each in this wave 1 here, we had 5 waves up. That was wave 1. And then we had a big correction, wave 2 down. So we would be looking at this as one big wave 1 and our wave 2 down. I have, like I said, between 3 and 5,000 in 2023, if I'm correct. Again, if we start breaking my support areas or old support, new resistance areas, then that may change. But as of right now, everything still seems to be playing out the exact same. This could be a pretty ugly bear market, even worse than what we've already had. I know a lot of people think it's over. I do not. I could be wrong. We'll see what happens. But let's take a look at this. This is on a 4-day chart. I have these fib channels in here, and you can see all these fib channels end up becoming support and resistance, right? So we broke this one here at that 23.8 range. But again, this is ascending. So where does that go? That's the 24.5 should be resistance if we even get up that high. But that's the next point of resistance. Now, if we start opening and closing candles above this, then we start looking at possibly going up to retest this one more time. And that would be in the high 40s. I don't think that's going to happen, but you never know. So if we drop straight down here, remember this was a 4-day candle. So if we drop down here, and again, I don't think it's going to happen in a day. It could. It probably will happen, and I'll show you in the 4 hour how we can compare it to the other ones and see how long the drop might be. But anyways, if that was to happen, if we were to drop down here in the next couple weeks, would be between 11 and 12,000. The longer it would take, the higher this target would get. But then if we break this one, then we start looking at these targets. Now, this is April of 2023. Again, this is not exact, but depending on where, if, when, and where it breaks this, it'll let us know when it's going to tag this. So let's take a look at some more stuff. This is the weekly chart. As you guys know, we were watching this as a bear flag, and I'm watching this as a possible bear flag. If this is getting close to topping out here, right? So how we got these moves, and we'll look at them. We're going to zoom down to the 1 hour and then the 4 hour. But as you can see here, the measured move of this flagpole from the break of the structure here to where it broke down, that got us our target, bam, almost perfectly. And then we look at this as possibly another bear flag. And we measure this whole thing as the flagpole, put it down. If we are to break in the next week or two, could go as low as 78.50. But if we measure just the channel, that's going to give us a shorter target of somewhere around the $14,000 to $15,000 range, right? Maybe expect a bounce there, possibly come back all the way up to here. But as of right now, let's zoom in a little bit. You can see how much the RSI is moving right here, how much upward momentum we're getting, but really in the price action, we're not getting much. That's starting out to look like some major bearishness. So right now, the 8 EMA on the weekly is right about 23.5. So the highest I would see us getting here is 23.5. Now, if that breaks, then we start looking for that 24.5 range. If that 24.5 was to break, our next would be around this 26.7 area, which is going to be this 200 EMA. I highly doubt we get above that, but guys, anything can happen. I want you guys to be aware that I know a lot of people just think that Bitcoin can only go up and it's super safe. It is not. It is a market, guys. Period. It's a market. Anything can happen, and there's some big players in here taking a lot of people's money. So if we're to get up above this, then we start looking a little different. And like I said, that 8 EMA is around the 23.5 range. 24.5 is my max, I believe, as of right now, for it to go in the bigger time frames. But again, if we come back down, break down here, I'd be looking for 14 to 15,000 and then, 7,800 range. Now, this is the daily chart. If you guys were around back here, we called this top. I thought it was going to go a little lower for wave 5, but remember I did say the middle of June would be the bounce. That's when we got our bounce. I was looking for an ABC correction, not looking for it to go this high, but everybody was calling 100K here. I made videos telling you there was no way it was going to go to 100K. I made some TikToks. I didn't think it would break this high, but nevertheless, on December 2nd is when I made that Amazon video saying we were headed down, and ever since then we've been heading down. Now, if we are to look at this as a bear flag right here, well, first of all, let me start back over here. If we look at this out of the way, if we look at this rising broadening wedge, guys, way up in here, I was talking about if this broke, start to look for 24.3, and how we got that was we measured from right here. Is that it? Right here. So we measured this rising broadening wedge, right? And I'd said if it broke here, you can look at the videos back then. I was talking about 51.5 for a long time. And if it broke, then we could look for this. And that's how I got that next target. Now, as you can see, this was back in December of 21. And we didn't actually hit that target until June of 22, right? So about 6 months. So when people see me draw these measured moves, they think they're straight. That's not how it works. That's just for your next target. But now this target should become major resistance on the daily, right? So let's look at this here as a bear flag from the break of the structure right here down to here. And we go to the bottom of the bear flag where it broke. That gets us at 68 to 7,800, somewhere in that range. But again, we have this 23.5 range that's going to be massive resistance, I believe, if we even get back up to there. That is the 55 EMA. We could get a wick above there and then come back down, but if we start opening and closing dailies above that 24.5, then maybe we could look for coming up to test this 200 EMA around the 33.6. But unless we break that, there's no need to look that direction. And guys, you're not going to miss out on anything. If you want, if you think this is the bottom, go ahead and buy, do whatever you got to do. I don't think it's the bottom, but even if it is the bottom and it's going to go to 100,000, you know, what's the difference if you buy up in here, right? So, but anyways, this is the 55 EMA is lining up with that 24.3, 24.5 range as resistance. If we break above that, start opening and closing dailies above there, then we start looking for the next EMA. But let's look at the RSI down here. As you can see, the RSI is breaking right here, but I want to stress that the RSI follows the body of the candle, not the wick. So we can still close below here. So that would be coming back down, all the way back down here. That would be a pretty big move, guys. That would be most likely, like I said, 12, 13,000. But if that does break, then we could be definitely headed towards these lower targets. Now let's look at the DXY. So the DXY right back here, we had this, and stay calm. We're going to get into the 4-hour charts. Then we're going to look at Ethereum, Litecoin, XRP, gold, and silver. Those charts are all really old. They're playing out beautifully, so I haven't changed anything. But if we look at this rising, or I'm sorry, this triangle right here, looking at it as a bull flag, we had our target of 106. And I said if that broke, I haven't changed none of this, guys. We'd be looking for around 109, which we went a little above where my target was, but I was just looking at this trend line saying there. Now, what I'm looking for here is a bounce. We may come down to this 106.6 area for the DXY before the bounce. If that breaks, we could come as low as the 105, but once we get this bounce, I think that'll be the continuation of the dump for Bitcoin and traditional markets also. But that's what I'm looking at. If you want to see the big, look at the monthly. So if we look at the monthly here, you guys know I've been bullish on DXY when everybody else was calling it dead. But if we look at this here as a falling wedge and where the breakout was, I have two targets, 180 and 172. You can see this is back in the 80s, right? This was 85. Markets were pretty bad shape there. Inflation was pretty bad. And look how fast this thing went up. We could be seeing the exact same thing here, guys. We could see another couple years of the dollar just plowing through all this. Well, there's only a little bit of resistance right there at 120 left, between 110 and 120. Once you plow through that area, there's really nothing stopping it from going straight up to here. So just something to look out for. We've been watching this whole time. That's why I said all markets together paint a picture. You need to be looking at what's going on all over, right? All right, here is the 4-hour. We called this top here at 48. I shorted there. I closed some of it here, but I rode this all the way down. I think I actually closed right around the $30,000 range on that position. Opened up many more since then. So, but anyways, let's take a look at what our target was. We were looking at this as a rising channel, hence bear flag, and that gave us our first target of boom right there. And we'll look at that in the next chart, but that 25.3 range, this 24.3 was also our target, which we did get pretty close to it, but that's still my resistance area there, guys. So a big move, like a really big move, is going to happen either at the break up from 24.5 or the breakdown from 17.7 again. That 17.7 was our target. We hit exactly, looking at this as a bear flag, and all we did was take it from the market structure break right here to the bottom of this flagpole, and then we watched it. Once we drew that bear flag in, that was our target. We hit it perfectly. A lot of people were calling for a 20K bounce and everything else, but we hit our target perfectly. Now, again, what I'm looking at here from the break of the market structure, measure this whole thing down to here, flagpole, break of the flag, 6,800. All right. So we did get a break up here. Will it hold? That's the thing. Will we get up to that 24.5 range? Well, let's take a look at what's going on here. So we're looking at this as a fractal. Still could be definitely playing out. We got above the 200 EMA, which we didn't do over here. Could be just a bear trap. So be careful. But there is another formation we can watch. But I'm still sticking to these lower targets. Once we break this bottom range, I'm going to say around 19,000. If we break that 19,000 again, we can look for at least that 17.5 again. And then we take a measured move of this, bring it down. That gets us around that 14 to 14.3 range. And if that breaks, I would look for a bounce there. But if that breaks, then we take this bear flag measured move, and that gets us down to possibly around the 82.5. Now, this is the 4 hour. Now, another thing I want to point out, you can see how this played out up here, this bear flag. We could see something like that down here. That's another possibility. We're going to take a look at the RSI here too in a minute, right? So put this in here, put it up there. So that would be showing we could get to around that 23.5, which matched up with other targets down there. If that happens, we could just be making a bear flag here. And then what that would change, let me widen this so you guys can see it. Now what that would change is then we would have a measured move measuring from here. And that one would get us down to around the 15.4. So that's another possibility. But as of right now, this is still what I'm watching here. Let's zoom in a little bit. Let me put the RSI. You can see what the RSI is doing, right? It didn't quite touch right here, so it could have one more little push up, or it could be over. But it may get one more little push up to here. Now, if the 4 hour closes above this, then we could see that rally to 23 to 24.5, somewhere in that range. But as of right now, you can see the alternating touches. We had a touch here, touch on the bottom, touch on the top, touch on the bottom. Not quite touched it, but that could be it right here, and then come back down to the bottom. Now, it could range in this area for a while. But that's obviously that's a big range. You know, that could get us down to the 14, go retest the 17. So this could be, you know, another month for this all to play out. We'll be keeping an eye on it. Make sure you're subscribed to the channel. I do daily updates Monday through Friday, and again, memberships on the weekends. But guys, it's still looking bearish altogether here. Nothing really has changed at all, other than breaking this little high, which could just be a bull trap. Let's zoom in there real quick and take a look. So let's see the RSI. We are making hidden bearish divergence. You can see the RSI is making lower highs here, and we're making higher highs up here. So hidden bearish divergence, that's also showing on the daily. Same thing in Ethereum and everything else. This chart is super old, guys. Ethereum 1564, which was one of our targets, should be the new resistance. If that breaks, we could see as high as 1800 before getting rejected. But if you look here on the daily RSI, that's going to create hidden bearish divergence. As you guys know, my first target for the downside here is around 680. Still haven't changed anything about that. Still looking for that 680 range. If we're in the longer term bear market, much, much lower for Ethereum. And Litecoin. So Litecoin, as you guys know, my target has been, since we broke over here back in December of 21, 24. I still think we're going to see that 24, 25 range. If we're in a longer term bear market, much, much lower. We are creating a bunch of higher highs here in the RSI, a bunch of lower highs in the price action. That's hidden bearish divergence. Hidden divergence is a continuation of the trend. The trend is down. We could draw in something like this and say we broke out, but where would that high target be? Take a look. That would show us for a high about 80 bucks, the highest I see that going, if this is a true breakout. But the volume isn't suggesting it is. We're making lower, you know, we're getting bigger candles, but we're not making much noise in the volume here. So we are also getting rejected right now at the 55 EMA, so something to watch for. XRP, same thing. Higher highs in the RSI, lower highs in the price action, hidden bearish divergence, continuation of the trend, bubble pop. And right now, the major resistance is at 55 EMA, around 37 cents. As you guys know, my target was 29. We did hit it over here. I do believe at some point this is going to break, and then we start looking for our lower target of around 17 cents. And again, if we're in a longer term bear market, it could go way lower than 17 cents, guys. Be careful with XRP. Be careful with all alts. Gold, this chart is a year old. Still heading for our target, 1561. Still looking for that. Silver, this chart's also a year old. Looking for that 15.5 still. I told you once 20 broke. Next target was 15.5. So still what I'm looking for there. You can see the RSI is pumping pretty good, but the price action isn't. So be careful. Thanks for watching, guys. Don't forget, smash that like button. Subscribe to the channel if you haven't already. Leave your comments down below. Let me know what you think. And let me know what time you'd like to see the videos for you members out there. Let me know what time you want the Wednesday videos to be. I got to try to figure out a time everybody's okay with, or at least the majority of people are okay with. And thanks a lot for watching. Take it easy, guys. I'm out.